Hi, my name is Kunal, and welcome to the Geeks of the Valley podcast, which connects with some of the brightest minds globally who are leading their respective industries today to discuss the hottest upcoming industry trends and how their work is affecting the global economy. This morning, from the San Francisco Bay Area, we have a very special guest, ex-CMO at Gradle Inc., co-founder of Evercoin, venture partner at BitBull Capital, and current general partner at Gumi Ventures. Thank you, Miko Matsumura, for joining us today.
Okay, it's great to be here.
So, and how are things over there in the Bay Area with you?
Oh, it's great. We're a bit under the COVID-19 lockdown, so things are a little bit funny here, but otherwise quite well.
I'm happy to hear that, Miko. And we have a very exciting call today. So let's jump right into the questions, shall we?
Sure.
So Miko, tell us about yourself and how your background and how it led to you taking the path of being a VC today.
Sure. I guess I'll try to take the kind of short cut through the long journey. So, I think like some people, I've had a winding road. So it's really not about sort of getting to my destination. It's really been about sort of twists and turns. So, I guess I should really start when I was in graduate school. So, I went to Yale University in graduate school for neuroscience, and I was studying abstract computational neural networks. So really working on, I think, the earliest stages of what is now popularly known as deep learning. And deep learning is really mostly about sort of building these hidden layer abstract neural networks. So, really early machine learning stuff. This was in the early 1990s. And then when I was in graduate school, basically, what happened was that it really struck me that it became sort of hard to sort of continue in science for me. I really felt an urge to become kind of more practical. And, I really wanted to scratch the itch of technology rather than just pure research. So, to make a long story short, I wound up in Silicon Valley. This is, about 25 or so years ago. And I actually fell into the Java programming language team at what was then Sun Microsystems. And, the thing that was really interesting is, when I first got to Silicon Valley, I was really kind of so lucky because, I really had these pains of in graduate school, I was studying C++. Right. So this is a really kind of a big sort of programming language. It's pretty low level language, and, it's filled with lots of kind of ugly corners, right? Lots of pointers and, memory management and, lots of just difficulties, So when I first ran across the Java programming language, it really kind of got me super excited, so when I was in graduate school, I kind of suffered from these pains of programming. And then, what happened after that is I fell in with these amazing programmers, and I eventually sort of got away from programming. So what happened was, I just continued to move sort of further into the human factors, and I started really thinking about human beings and a little bit less about kind of the machines and the programming languages. So the thing that's really interesting for me in that journey is, like one fine day I was, living a kind of a life of science and programming and engineering, and then one day I joined what I considered to be like a real engineering team, and I saw what real software engineers were like, like James Gosling, the creator of the Java programming language, and like every single person on that team had more programming skill in their little pinky than I had in my whole body. So, at that point, because of that, what happened was, I moved into what was called developer evangelism. So I became the evangelist of the Java programming language. And the thing that happened for me is it was so easy because I had such a profound love for this programming language and platform, and the love that I had it came naturally because I was so filled with the pain of the previous generation of languages. So, for me, I was just incredibly excited. I couldn't stop talking about Java, and to this day, my Twitter handle that I tweet from is Miko Java, Mikojava. And this is 25 years later. And of course, if you think about it, 25-year-old programming language, like that's pretty old, right? Like people talk about like COBOL, or they talk about it, and Java is sort of this boring old stuff that runs banks, but at the time it was very new. But the thing that was interesting is, essentially I kept sort of ever since then I've been in I guess what you would call marketing. So ever since then, I've really been more interested in sort of the human side than the machine side. But I've always really been interested in that boundary. I've been interested in the boundary of like humans and machines, machines and humans, and really thinking about that. And so I've been working on open source software. I've been working on startup companies, ever since then. And that was a big transformation for me. The big transformation was moving from the product and engineering side to the you could call it the business side, right? So really, when you think about the value chain, it really moves from engineering and product on one hand, and then the business side, which is sales and marketing, on the other hand. So I really moved on to the other side of the value chain.
Wow, Miko, thank you for that insight. Just, going back a bit, you have been an entrepreneur, right, in the Valley for about the last 25 years, running startups that have grown to be some of the leading companies in the Valley today. How has the culture changed, and how has the way of thinking of entrepreneurs changed over the last 3 decades or so?
Yeah, it's so interesting because Silicon Valley has always been sort of a land of dreams, and it's always been uh, tremendously open, and I think that part actually has not changed much. It's an inventive culture, and it's a very open culture. And I think that it's because it's open, it means that new people and new ideas can all kind of come and mix and join. And it's in some ways it remains shocking to new people who are maybe from more traditional regions that they show up here, and the people whose blogs they were reading, or people are reading in the TechCrunch, or they're just quickly can get meetings with just about anyone. So that's something that is still true today. And I think it's really exciting and wonderful, and it feels great. The thing that I think is changed is that I think that what's happening is that things feel much more industrialized. So there's much more competition, there's much more scale, there's much more money. There's much more of everything. So there's many more people here. So I feel like that's a bit different. So I feel like it's a little less innocent, and I think it's a little more, I guess, mechanized or maybe industrial. And there's a lot more kind of emergent standards of the way people do things, and customs. I guess to me, it feels there's a lot of ritual and a lot of tradition that's kind of built up over the years.
Wow. And, focusing more on the current pandemic, How are people handling COVID-19? And does Silicon Valley matter anymore, right? Because some of these companies are now allowing people to stream and work from their household indefinitely.
Absolutely. So, I think that really the thing to understand about this is that it's important to think about the culture of Silicon Valley, as almost kind of, I would call it a T shape. And, the vertical bar of the T is really connected very deeply to the geography and the history, right? So, I think the thing that's fascinating, Eric Schmidt, the former CEO and then subsequently chairman and then subsequently advisor, and now he's disconnected entirely from Google. Eric Schmidt was asked, what's the secret sauce of Silicon Valley? And his answer was very deceptively simple, which is Eric Schmidt said, it's the weather. I had the good fortune of actually working with Eric Schmidt. He was also an important part of the story of the Java programming language and platform. And he was actually the chief technology officer of Sun Microsystems at the time that I was there. I was actually part of the group that went to pitch the CEO of Intel on the Java platform and language, who at the time was Andy Grove,
Wow.
who wrote the book, Only the Paranoid Survive. So fascinating character and, definitely old timers in the Silicon Valley story. But, Eric Schmidt said it's the weather. So the thing that's funny about thinking about, the weather of Silicon Valley, like, what does that really, because it sounds very shallow, right? But the thing that's fascinating about it is what he's really talking about actually is at some level capital formation, right? Which is what happens is that, people get fairly accomplished. They establish kind of significant economic means, and they do so through technology and industry. And the question then becomes, what do they do after that? Right. So, for example, let's say that Silicon Valley was situated in, maybe the Arctic Circle, one of the coldest places in the world. Right. So if someone were living there, they might think, well, I made a lot of money. I think I'm just going to move now. I'm just going to move to Tulum, Mexico, or I'm going to move to Hawaii, or I'm going to move to Tahiti. I'm going to move someplace really warm and nice and pleasant because I don't have to put up with this anymore, right? Like, this is ridiculous, And so weirdly, Eric Schmidt has, I think, a deeper thing to say about the geography, right? Which is that one of the deeper things to say about the geography is that the warmth of the geography, the hospitability, the temperate climate, the food, all of these kind of positive geographic qualities actually interconnect a network of angel investors, and that the angel investors tend to kind of stay and put, they tend to kind of meet together in person, and they tend to kind of take their skills and they use the skills to sort of mentor and spin up new companies and then kind of take those companies, big. So I think that geographically, if you think about the T shape, that there's a deep taproot, right? It's the vertical bar of the T that sinks kind of deeply into the ground of Silicon Valley. One of the things that's fascinating about the ground of Silicon Valley is that we're home to things like the San Andreas fault line, and there's a number of fault lines that kind of travel through the San Francisco Bay Area that have the quality of even making the ground itself unstable. And why is that of interest? It's because it's really about kind of disruption. So, if people experience earthquakes, it's a psychology where the people feel that anything can be disrupted. Even the ground isn't solid, right? That everything is kind of up for grabs. And I think there's a lot of dimensions of the geographic aspect of Silicon Valley. But I did mention that it is a T shape, right? So what is the horizontal bar? To me, the horizontal bar is that when people use the phrase Silicon Valley, it's actually a global culture. It's a global culture and it's fully exported. So, you can go to many, many, many places, and what you're going to see is you're going to see Silicon Valley culture, right? So if you go to Tel Aviv, you go to Haifa, you hear maybe it's a cybersecurity startup pitching you, and like, how do they pitch? They're using the Sequoia Capital pitch deck template. They're using the Y Combinator post money safe note. It's like, where did all that come from, right? It comes from here, right? So, the horizontal element is really what you're talking about in terms of the COVID phenomenon, right? Which is that there isn't anymore as much of an urgency around kind of being in the regional culture. But, I do think that at the end of the day, face-to-face meetings, are not going to snap back immediately. But, and I think obviously there are going to be things like virtual reality meetings, Zoom meetings, so obviously that's going to be radically more prevalent. I don't know when handshaking is going to come back, physical grabbing someone's hand, but I still believe that human beings are social mammals and that they will continue to interact in physical space. So I think eventually geography will matter again. And, I think there will be private events, and there will be dinners, and there will be the types of things that, I think in a lot of cultures feels clubby, and it feels exclusive, and it feels kind of shady. But I think in Silicon Valley, the reason why it doesn't is because it is open, right? So, you can have this like VC dinner and anyone can come, and I realize that sounds a little disingenuous since I'm part of this community, but, I encourage you, after the COVID phenomenon kind of yields a little bit and people start feeling more relaxed, I encourage anyone to come over and see if it's true. And, I think you'll be pleasantly surprised, wow, I was able to get a meeting with fill in the blank, and people are very open about it.
Thank you for that insight, Miko. I want to dive a bit deeper into this. So when it comes to this aspect of, right, people working from home, do you feel like, what are your thoughts on this whole psychological aspect around people not being able to have that touch or that human emotion when shaking someone's hands or being face to face with them, rather than being, when someone's maybe over Skype, FaceTime, or Zoom?
Yeah, it's really, I think, a complex evolution, right? Because, I think to me, the layer that is absolutely the most significant is the trust layer, right? Like, so for me, when we talk about trust, like trust is really one of those things people talk about, like a gut feeling, right? And they make decisions related to trust kind of at a gut level. So for example, like, currently, and maybe for the past 2 years or so, I've been in the role of a professional venture capitalist, and I've been helping to deploy capital on behalf of the partnership at Gumi Cryptos Capital. And, when we do our work, one of the things that we're really, really essentially doing is we're really trying to get conviction about entrepreneurs, right? And there's a trust element that's so important, where you're really trying to spend as much time with entrepreneurs, and you're trying to get as much signal as you can. And, it is, even in a kind of a Zoom meeting, there are a lot of issues, right? So I find that, we continue to deploy capital out of our fund. But at the same time, we have to rely on kind of much more quantitative rather than qualitative mechanisms. We rely more on kind of networked information, including like off-road reference calling. So instead of really just getting a feel for a human, we're really reaching out to their shared networks, and we're reaching out to lots of people and trying to find out, like, well, what is this person like? What have they been doing? How do they act? Have you known them for a long time? What did you do with them? So it's really, there's a lot more legwork associated with it, and at some level it may be better because you may be building a kind of a longer term, more three-dimensional picture of a human. But, I think that we're really, I think, amazingly able to compress information related to trust and trustworthiness in person. And I found that to be one of the hardest things about this period.
Very interesting tactic that you guys are trying to adapt to. And that kind of goes into this aspect that, right, you're the general partner at Gumi Cryptos Capital. And recently you wrote an article to your investors on COVID-19 updates and how the firm is handling that. Can you expand more on that article and your overall firm investment thesis?
Yes, absolutely. And, anyone can review that on blog.gumi-cryptos.com. Gumi spelled Gumi. So gumi-cryptos.com. And, the thesis that we have is really related to the emergence of the technology of blockchain. So, I think the word blockchain gets very kicked around. I think that there's some people who go as far as to say, I think Jimmy Song was talking on Twitter about how there are no use cases for blockchain other than Bitcoin. Right. So that was his sort of thesis. Right. So in some ways, like, we as a fund sort of beg to differ, but we're not so extreme as many people in the industry who sort of seem to think that blockchains can be used for anything, right? So we're sort of in between. And the thing that we really feel is very significant about the emergence of this so-called blockchain technology. I say so-called because Satoshi Nakamoto, the creator or inventor of the current modern style of blockchain, never even called it a blockchain. And in fact, the chaining together of cryptographic blocks is actually just one of the least interesting features and actually least novel features of the so-called blockchain, right? It's really produces cryptographic immutability, but to wind it all the way back to kind of what do we think? Like, what is this fund about? What the fund is about is it's about the idea that we're in the early stages of a new internet, right? And, I think that we're probably in good company. If you think about Andreessen Horowitz just raised a crypto fund number 2, which is about $500 million. And their fund, Mark Andreessen worked at NCSA, which is the home of Telnet and of HTTP, not the W3C protocol, which was, built mostly in Switzerland at CERN by Tim Berners-Lee, but rather the first HTTP browsers that got popular, which is the Mosaic browser, right? So, really popular browser, and eventually became not Mosaic, but it became Mozilla, and then, Firefox, and then obviously Netscape. So if you look at the history of what Mark Andreessen has done, it seems like he's in a similar mood, which is the idea that we're talking about the emergence of a new protocol, right? So the question that arises when you think about a new protocol based on blockchain is, what is it good for? And I think the thing that is really missing in a lot of people's reasoning is people think it's because Bitcoin contains, or may even be looked at as, a database replication protocol, that the blockchain is a database. But if you reason about the blockchain as a database, you're really, really messed up with respect to understanding what applications make sense, because databases are primarily for the storage and transmission and transformation of data. And the reality is that data isn't the point. The point of blockchains is more like witnessing. It's more like a unique history recording device. And really, at the end of the day, it becomes the key building block of what people, I think, call the Internet of Value. So what we're really talking about is we're talking about the storage, the transformation, and the transfer of value. And so value applications become the critical factor. Now, when we talk about transfer and transfer of value, we mean initially, of course, tokenized representations of currencies, including infrastructure currencies, asset-backed currencies, securities. There's lots of different essentially representations of value, because these are all about the storage of value, the transfer of value, the transformation of value, contracts of value. So it's all about value, right? So all applications related to blockchain that make any damn sense at all have to do with value, and so that's why this moniker comes out, the Internet of Value. So that's really what we believe as a fund, is we believe that there will be applications that will relate to the value. But the thing that's so interesting about once you inject a native representation of value into the internet is you actually begin to solve a whole host of externalities and problems that the internet has. And then you begin to, from there, solve a whole host of externalities and problems that human society has. So, from our perspective, this concept of open source financial infrastructure and open source money becomes, I think, a really, really interesting way to sort of transform both the internet itself, but also society. So, I haven't commented at all on how that has been impacted by COVID-19, but broadly speaking, that's really the way that I see this so-called blockchain phenomenon, is the emergence of this kind of value internet. And, obviously we're in very, very early stages of that, because, it's still mostly at the protocol layer and the applications are still pretty new.
So Miko, based off everything you've kind of said, when it comes to your recent startup investments, can you kind of shed light on that? I know recently you guys had invested in a London-based startup called Keyless, right? It's a biometric authentication and personal identity management platform.
Yes,
Is that
we're
right?
very excited about Keyless. They're getting enterprise contracts and enterprise traction during this kind of COVID downturn. And, the reason why I think it's great is, that they're actually attacking applications that sort of really matter a lot to enterprises during this time, which is what they're providing is essentially a privacy preserving biometric authentication, initially for the remote workforce. So what it means is, do companies have remote workers? Yeah, of course, right? That's really, many technology companies, have mostly remote or entirely remote workers at the moment, and so I think the idea that those workers require, more sophisticated authentication, I think is very important. But I think in the long run, the thing that also becomes important is how do we ensure that those workers and ultimately even end users that have to authenticate are getting their privacy requirements met, and how do the enterprises that are deploying these kind of authentication protocols, how do they ensure that they're compliant with GDPR or with other kind of privacy preserving regulations? So that's something that's exciting about our recent investments. We also led investment round in another company that is called Credo, Qredo. That's a very exciting company, and they have, I think, fundamental technology in cryptography. So, we're really excited about what they have to offer. They're essentially building this kind of, I guess I would characterize it as sort of a super fast, secure digital asset network and protocol. So it's really it's amazing. You could think of it as maybe like a layer 2 network, but it's based on some foundational novel cryptography. So big fan.
So when it comes to this aspect behind cryptography and investments in this type of industry specifically, what parts of the world are you finding the most innovation in when it comes to this?
So we generally kind of hunt in the US. We sometimes find ones, Credo's London-based. Keyless actually has a London office, but they also have a office in Rome. So surprisingly, we are seeing innovation and great companies coming out of Europe. We have a few that we're looking at out of Asia. We actually have one we're looking at that's based in Africa, of all places. But, I think largely speaking, we continue to try to focus on, companies that are in the US and in our local geography. That's kind of almost a typical instinct of venture capital, which is that venture capitalists tend to try to invest in companies that, are sort of quote unquote within driving distance. That's sort of a typical approach.
Interesting. Now, when it comes to, I want to switch the topic here to focus more on, your personal ethos, right? What are your thoughts on, you look at the world financial infrastructure today. What are your thoughts on today's banking systems and the Internet of Value just in general?
Yeah, to me, one of the things that I see happening with Bitcoin as an asset is that it's increasingly properly understood. And the way I would talk about it is it's increasingly properly being understood that for most people, Bitcoin is a hedging instrument, right? So the reason why I'm sort of characterizing it this way is, if you look at, there's a pretty famous macro investor, Paul Tudor, who's currently, essentially declared that 2% of his total asset portfolio, which is quite large, is Bitcoin and Bitcoin exposure, right? So when we talk about hedging, it feels like today's macro is absolutely it's a world of hedging. And the reason why I think it's important to say so is because what's happening in the geopolitics is that we're really in an unprecedented territory, right? Now, if you believe the broader Bitcoin thesis, the broader Bitcoin thesis is obviously the war on cash. The other elements of that thesis include things like the consistent erosion of the buying power of traditional fiat currencies. So, if you look at, for example, if you look at the US dollar's buying power since 1913, we're talking about, I think, a 93% or greater drop in purchasing power. So what's known is that because of rampant money printing and the emergence of modern monetary theory in the early 1970s as a function of President Nixon removing the bimetallic standard as an asset backing from the US Treasury, the thing that happens at that point is that the dollar becomes kind of just a abstraction. It becomes something that, people assume has value because, it's backed by the full faith and credit of the United States government. So it's backed by taxes, it's backed by an army, it's backed by debt, a very large amount of debt. So it's, obviously, when you look at the current U.S. Federal Reserve balance sheet, it's currently tracking at about $6.13 trillion. And one of the things that's really astonishing is that if you look at the history of the United States Federal Reserve balance sheet, what you saw that it was actually around $1 trillion balance sheet pre 2008. And then as we know, in September of 2008, Lehman Brothers disappeared. It went bankrupt and it spontaneously destroyed $600 billion of its own balance sheet. But it set up this cascade across all financial institutions, including AIG, which had insured Lehman. So, really what started this cascading collapse of the global financial system, as you all know. So during that time, the Federal Reserve actually the balance sheet ballooned from about 1 trillion to more like 4.5 trillion. And then it's pretty much stayed that way since 2008 until recently. And, recently with the emergence of the COVID phenomenon, it started to balloon again. And, we've moved up from 4 trillion, 4.5 trillion to about 6.13 trillion. And it's estimated that we may balloon as high as 10 trillion, even before the end of the summer. So, it does seem like, those estimates vary pretty greatly because it's pretty unclear what the government's prepared to do. But, it seems pretty clear that the Federal Reserve has declared that they have any number of instruments and they're prepared to go to any lengths. So, if you believe the kind of Bitcoin macro thesis, then you buy Bitcoin, because Bitcoin has an asymptotic limit of 21 million Bitcoins. And we recently underwent sort of a supply halving event, which, I think is a fairly rare event in Bitcoin. But all that means is it means that the supply of newly minted Bitcoins is cut in half as a reward to miners. And as we know, it continues to halve until it asymptotically reaches the limit of 21 million Bitcoins that will ever exist, in the world. So, I think because of that digital scarcity, the thesis is that, you don't have to think that like, oh, the Bitcoin is, how does Bitcoin increase in value? Right. So the answer is generally that it doesn't. Right, that the broad, or it doesn't have to. It doesn't have to increase in value. The thing that it does is it actually just has to hold value. And as long as the instruments that you're comparing Bitcoin to continue to lose value, then Bitcoin will appear to become higher and higher in price. Now, the other way to look at Bitcoin, though, is that if more and more people use it as a hedge against government money printing, that it itself will, that hedging function is actually an intrinsic value. So I think one of the things that people really, really deeply misunderstand is they misunderstand the idea that of the intrinsic value of Bitcoin. So people say that gold has intrinsic value, and the mood of the intrinsic value is that it's used on things like electronic printed circuit boards, right? So they think, oh, gold has intrinsic value, therefore it's safe to buy gold. So the thing that's funny about it is that that's only 2 to 3% of the total supply of gold that's being used at any time in this kind of application. So I don't think it's all that meaningful. The thing that I think is more important to think about is what is really the use case for Bitcoin. And since the original white paper suggested that it would become a peer-to-peer electronic cash system, people are now in the mood of Bitcoin doesn't have any use. But I think that, again, I'd like to come all the way back to the beginning of this conversation and say Bitcoin is being used as a hedge. So the question is, what is it a hedge against? It's a hedge against government money printing, right? And so that's a use. Like, and the way that use proves value is you basically put money inside of there and you basically hang out and you see what the government money printing does to the value of your Bitcoin. And if the value of Bitcoin goes up, then it worked. Right. So people say that that's speculation, but I actually think it's something much deeper. So, and I think that Bitcoin, I've talked a lot about Bitcoin, but, I think it's very clear that Bitcoin is sort of a killer application, and it's, to us, it's not to say that there will be no other applications, because we do think that Bitcoin is actually a very sort of primitive form of asset in the sense that it really performs a very simple function. And in fact, things like Ethereum and decentralized finance will potentially provide a larger number of potential sort of financial market functions.
So to really sum this up, BTC, you would say, is a financial instrument that hedges.
Yes, and people say that it is a decorrelated asset, and so when I say that it's important to understand it as a hedge, is that it's a hedge for a time when hedges are needed. And the reason why I say, like, what is a hedge, right? When people talk about hedge, they're really talking about a hedge effectively as a defensive fortification, right? So if you think about like the metaphor of a hedge, like people are saying, oh, that person's hedging their bets, right? So the idea is that it's a hedge is this notion of something that's defensive, right? And the idea that you might not need it is reasonably appropriate. So the question then becomes, how do you create these defensive positions, right? And so, and what's an appropriate defensive position? So if you think about what Paul Tudor is doing, he's basically saying, well, look, I'd like my exposure to be 2% of my portfolio in Bitcoin or Bitcoin-like equivalents, right? And so, that's a hedge, right? Because obviously if Bitcoin does ragingly well, that will be a very nice thing for him. But if it does terribly, I don't think he's going to be in tears, right? And I think that the thing that's important to understand is that as a role function in a broader portfolio, I think it's quite important, especially in an atmosphere when there's kind of rampant government money production. So, and I think that, other hedging instruments such as gold, I think gold is meaningful in this context as well, because I think the thing that's super important to try to understand is how accurately should investors estimate their own ability to predict what's going to happen next, right? How confident should investors be in their power to predict the near-term emergent future of the next maybe 6 months to a year and a half, right? And I would say that if you look at the VIX, the volatility index, it's the fear index, right? So it feels like there's quite a lot of fear and uncertainty and doubt because of factors such as, is there a second wave COVID? What is coming up next, and what will the government do? There's so many questions. And I think that obviously we don't have the answers, right? We're not obviously the VIX has come down since the March highs, but it continues to reflect uncertainty. And, I think people who are, very confidently predicting the future, a V-shaped recovery, all of these things, I think that's premature. I don't think we know what happens next.
Miko, there are also people that ask this question on how is it that you can value something that's not backed by anything physical?
Yeah, I think that's, obviously it's an interesting question. I think that there are very simple valuation mechanics that are already well characterized, right? So, to me, I've already discussed kind of the fundamental utility, so it has utility, which is essentially, it's really the only open instrument that kind of offsets this kind of traditional monetary system, right? And it behaves a little bit differently from gold, which means that it's slightly decorrelated from gold. And the reason why it's slightly decorrelated from gold is simply that gold is already being heavily used by central banks. So, Bitcoin as yet is not heavily used by central banks, but at some point it may be, right? And so the thing that becomes really interesting is what if that does happen, right? So the question that I think you're asking is more like, if it doesn't have any utility, then how can we value it? And to me, what I'm proposing is in fact, it does have utility, right? And the question becomes, how do we value the utility of it? I think in a way, one of the things that's very tricky about Bitcoin is that there's one of the things that has to be priced into Bitcoin is actually the value of the network effect associated with Bitcoin. And that's something that I think causes traditional valuation mechanics like stock to flow actually to kind of go askew, right? Because what you have to price into the value of Bitcoin is the network effect. And when you look at something like Brent crude prices, obviously they've recovered from sub $20, but when you look at petroleum, there's not much of a network effect. I mean, there's mild network effects, right? Like, for example, things like the distribution network, oil tankers, the existence of gas stations, things like that produce a kind of a mild network effect, but it's certainly not comparable to the network effects that you get with something like a Bitcoin. So if you price in the network effects associated with that, you get a very interesting effect on the sort of value and, sort of long-term forecast for what you'd expect an asset like that to do. And again, you're not going to see a comparable network effect associated with gold either. And when I talk about a network effect, it's a very funny thing, because it's not like the telephone network effect, it's a little bit different from that. Like the telephone network effect is, if I have a telephone, I can call anyone else who actually has a telephone, right? So that's really kind of governed under so-called Metcalfe's law, which is, really the value as per the square of the number of network node participants, right? So that's kind of the network effect associated with that. Whereas I think that the Bitcoin network effect is actually a really weird one. And it's one that I think has caused historically people like Warren Buffett to declare it to be a rat poison, right? Because what happens in the network effect of Bitcoin is that people who own it tend to become promoters of it. And, I think that that's a very, very unusual network effect. It's not measured against the typical kind of network node n squared property that you see, in a Metcalfe's law. It's a different form of network effect, but I think that that's something that has to be accounted for. So to me, again, I think it's really appropriate. I think a lot of folks like Anthony Pompliano and others, CZ from Binance, they're often talking about sort of the rules of Bitcoin. And they're often kind of posting, things like, don't put in more money than you can afford to lose. It's a speculative asset, blah, blah, and so they have a lot of good rules, don't go into debt in order to buy Bitcoins, so there's tons of really good, sound things to think, and obviously to me, all of that ends up pointing towards this notion of it as a hedging instrument, right? Which is when you think about Paul Tudor, he's like, oh, it's 2% of my exposure. What happens when you have increased exposure to a decorrelated asset, and decorrelated is a relativistic term. It's decorrelated from whatever else is in your portfolio. If you have that kind of exposure, what happens is your Sharpe ratio improves, right? So that you end up having, basically a better profile of risk and reward. And so I think if you look at it from that perspective, it's very handy. It's a handy instrument. Now, again, this is all conjecture, right? And that we've never been here before. This economy is something no one's ever seen before. The history has not been written before, and Bitcoin is actually not anything that anyone fully understands, right? And I think what will happen is the history will be written. And I think in the future, we'll be sitting around saying, wow, I really should have understood Bitcoin to be X, because that's what it turned out to be, and what that paragraph is as yet, unknown. And I think we need to treat it as unknown. I think there's people on both sides of the spectrum that really feel like the story's already been written, and they're kind of, talking about it from the inside of their time machine, so I think there's a lot of Bitcoin maximalists who talk about it as if Bitcoin has already become sort of a fully established, sort of fixture. And I'm not minded that way. My mood is, and obviously there's people on the reverse as well. Folks like Nouriel Roubini, who are sort of the anti-Bitcoinists, and they've already declared Bitcoin to be sort of dead, or of nominal or no value. And obviously that history hasn't been written either.
Truly well said, Miko. Now, kind of looking at this from the overall banking perspective, and how banks are trying to compete against one another and have a competitive edge over one another, right? So they're trying to offer, all these banks are trying to offer these very unique services, right? And one of the biggest asset managers in the world, right, JP Morgan, recently extended services to BTC exchanges. Based on this, what does banking look like in the future, and who will be the beneficiaries of this change?
I have two lenses on this, one of which relates to kind of retail banking and the emergence of the neobank. So I think that's, I'm going to put a pin in that, because what I really want to talk to is kind of more about what I see as being the eventual inevitable dominance of what I call open source financial infrastructure, right? So what I mentioned, I don't know if I mentioned it at all, but I actually worked very closely with my co-founder of Evercoin on a previous startup company called Hazelcast, which was an open source in-memory database. And it was actually a sort of financial transaction processing system, and it's an in-memory caching system, that allowed transactions to be processed like super, super fast, right? And the thing that was interesting about watching kind of open source financial infrastructure is that just like any open source software, it essentially lowers the cost of infrastructure, right? That's what open source does, right? So if you compare open source to closed source, what's really happening is that you're getting commodity infrastructure for cheaper and cheaper. So the question becomes, like, how could that possibly be disruptive, right? Because it's infrastructure, right? So, the thing that's really interesting when you think about it as from the perspective of complexity theory, what you're really looking at is you're looking at the effects of lowering the costs of the cost to enter, right? So, when you look at a system from a complexity theory perspective, you're really looking at the impact to a large number of different players. So what you're really doing is you're saying, I'm running a circus or a platform or an economy or a festival or a city or a world or a city state. I'm running basically a thing. And what I'm doing is I'm charging every single participant less in order to play, right? That's what I'm doing, right? It turns out that the nonlinear effect of doing that is that you increase the innovation on top of the platform. So the lower the cost of infrastructure, the higher the rate of innovation, and obviously the higher rate of competition, right? Because what you're really doing is you're making it easy for smaller participants to enter. So let me give you a very simple, example is if you look at things like the Apple App Store used to be called iTunes, what they're really doing is they're making it very low cost for developers to deploy applications, to at least hundreds of millions of users, right? So that's a very low cost infrastructure. You just go in there and deploy your app and life is good, similar to Android and the Google Play infrastructure. Right. So what people are trying to do, if you look at the internet as an infrastructure, it creates a very low cost way to reach a large number of humans, billions of humans now connected to the internet. So if you look at the concept of open source financial infrastructure, including Bitcoin, the thing that you really have to understand is you have to understand the history of open source software, which I've been kind of mucking around with for probably 30 years now. And the thing about open source software is that if you look at, for example, the largest tech companies in the world, you will find 0 companies that aren't hugely benefiting from open source software, right? So to me, how do you reason about that? So if you look at these companies, people talk about like Fang Man, right? Sort of Facebook, Apple, Amazon, for some reason, Netflix, Microsoft. So there's a whole bunch of companies that sit kind of in a pile. Every single one of those companies is a huge beneficiary of open source software. Now, I would say that there's some of them that are mostly benefiting without contributing all that much, right? And there are certainly people at those companies that would take offense for me saying, but I would say, for example, like Amazon contributes less to open source. I would say that Apple contributes a little less to open source, although, they've contributed like thousands of packages to open source. So it's not like they're, doing worse. But I would say, for example, Microsoft, Facebook, Google, like they're contributing hugely, right? So they're really almost close to open source software companies. So why am I kind of going all the way down this rat hole, right? Because the way I reason about the emergence of Bitcoin and blockchain is that those are just open source financial infrastructures that lower the cost of the delivery of services, right? So if you look at Bitcoin, one of the things that Jack Dorsey is super interested in is sort of Bitcoin in Africa. So, we're seeing kind of an explosion of Bitcoin activity in places like Nigeria, which is a super fast growing economy and a fast growing population. It's really, I think in our lifetimes, we're definitely going to see Nigeria being, more populous than the United States. So it's a very young country. The average age is they're fairly young people. So if you think about the embrace of something like a Bitcoin in that kind of a setting, what's the meaning of it, right? And if you think about Pan-African adoption of something like Bitcoin, the thing that is really happening is that you're having the lower cost, right, of delivering services as a function of open source. So to make a long story short, the point that I want to make is that the financial industry will only have beneficiaries of open source financial infrastructure, such as blockchain and Bitcoin, and essentially the deceased. Like companies will either benefit from this infrastructure or they will be dead. And the reason why I can confidently say that is that's what happened in the technology industry. Now, the technology industry is not open source financial infrastructure. It's just open source software. So, if you're going to resist open source software, best of luck to you, because what that means is that you're going to have a bunch of in-house software developers competing against free software. You're going to have higher cost of operations, and you're going to probably deliver less innovation on the layers that are less commoditized. So, if you're really spending a lot of money building stuff that's a commodity, you're not going to compete. You're really going to be a bad company. So is the JP Morgan banking move a capitulation towards Bitcoin and blockchain? I would say it's more like a long, protracted chess game. Right. But for example, another company that's large, that's making very, very significant investments into blockchain technology is Visa. So Visa is hiring prodigiously in the blockchain technology. They're making very big investments into the Ethereum platform. So we're seeing very, very significant financial industry players and governments investing heavily into open source financial infrastructure. So to me, the open source dimension of this is absolutely inevitable, and open source will absolutely inevitably dominate the software industry. And of course, open source financial infrastructure will be no different, and to me, the only thing that is debatable becomes the timeline. So, we don't know when it's going to happen, but it's inevitable that it will happen.
So, Miko, I want to pivot the conversation just a bit here
Absolutely.
before we wrap up our call. In an earlier conversation, you mentioned that you're reading the Bhagavad Gita. How did that kind of come to be a source of inspiration for you?
It's been quite a tremendous sort of transformation for me. So, I really so I grew up as culturally as a Buddhist. So I'm essentially a Japanese Buddhist. So we practice sort of Zen Buddhism, in that kind of culture. That's where my family is from. And so, for me, I've long been in this kind of meditative practice, and I've long been in this kind of Eastern, I would call that kind of karmic mindset, which is part of this sort of family of spiritual practices. But, the thing that happened was really, I had challenges that came through my life. And, actually my father passed away. And, really what happened is that, then one day my practice just dried up, so I was in a meditating practice, but like I was kind of unable to continue. And in a way, I kind of experienced sort of a depression. So, for me, I was really in a state where I wasn't able to understand kind of how to continue operating my life, and the sort of meanings that I ascribed to the purpose of performing action, in the world kind of had really sort of broken apart for me, and I think that obviously, it's a funny thing, right? Because, when we're younger people, we have these just big relationships in our lives with our family. We want to impress our dad, and we want to all these things, and in a way, these meanings kind of eventually have to fall apart as a function of just the impermanence of all things, right? But to bring that kind of story home, because of that kind of experience that I had, I really started to try to seek out the roots of the culture within which, the Buddha created his reform, right? And so to me, it was very similar to, what happens if Christian believers kind of visit their holy lands, and they start trying to understand the spiritual, cultural, and historic context of, Jesus, right? So for me, trying to understand the spiritual and historical context of the Buddha kind of caused me to sort of really start to explore sort of the Vedic roots of Buddhism, and, really trying to understand the social context, which is essentially, if you were to properly characterize the original Buddha, I would say that you would only be able to conclude that he was to use a modern word, Indian. The geography had a different terminology, during that era, perhaps, but, being that India is such a modern country, but, but I would say that, from the general region of the Indus Valley, and, focused on this area. But I would say that when you look at it from that perspective, essentially what happened is that I really experienced this sort of final realization that Buddhism as a reform spirituality is ultimately kind of monastic. So it's really kind of best and most appropriate for monks. And, within the context of, I would say, modern, what people refer to as Hinduism, the Sanatana Dharma, like it's really more that there is a householder tradition of spirituality, and it's so to me, like finding this kind of sort of a spiritual path, and, finding a bit of I guess I would say a spiritual cousin, allows me to sort of continue to live, as a self-identified non-theistic Buddhist, but at the same time gain sort of this richness of a deeper, more historic tradition, and essentially the root of Eastern spiritual thought. So that kind of makes me into a, sort of a fan. So I guess I would say that ever since then, I've really been thinking hard about how this text, the Bhagavad Gita, which, by the way, was the playbook for Gandhi in his sort of salt march and, experience of resistance against the British occupation and colonization of India. So, I feel like it's a very powerful treatise for how to take action in this world, and how to understand how an individual can fit into a very complex world. So, I think it's, has a lot of really interesting clues in it about sort of how to live life, and how to, be a part of the world, instead of what Buddhism tends to support, which is more about renouncing or leaving society and, becoming a monk and living in a cave. So, that's kind of my mood. And obviously I'm being very sort of reductionistic. I do think that, obviously I continue to identify as a sort of a Zen Buddhist, but, I do think there is a richer historical spiritual context.
I think this perfectly transitions into our last question of the call. What piece of advice would you give to people out there from the journey you've had thus
I
far
think that my latest hobby horse is really related to habits. So, I recently read a book called Atomic Habits, and it's very lovely. And, there's another author also who I'm sort of friends with, BJ Fogg, who's a Stanford professor who writes a lot about habits as well, very eloquently. And, to me, like, I acquired sort of the habit of meditation. You all don't have to meditate. Obviously, everyone has their own traditions and their own practices. But, to me, the thing that becomes more important is the process of self-improvement and self-inquiry. So, if I were to give anyone any advice, I think that's really the most core component of sort of finding your way in this world, and I wouldn't necessarily advise, I think it's, sort of literally and physically impossible for someone to recapitulate my eccentric path that's caused me to arrive in this form in this present moment. So, it's been a very winding, journey of which I've only covered a few little bits of, but, for me, finding your own journey really has to do with sort of thinking about kind of continuously improving, and the thing that is important about exponential phenomenon is that continuous improvement in a very small degree is actually the compounding interest of this world, right? So, if you're able to improve by 1% every month, it sounds like a pretty trivial thing, but let's say you're improving by 1% across 10 different categories of things. If you compound that over years of practicing those things, you're going to be exponentially better at anything that you put your mind to. So I'm a big fan of thinking about being in a consistent improvement loop over habits, and kind of, I think I would encourage at the moment people to read Atomic Habits, which is a really, it's also a lovely audiobook, which is another great way to consume media and to enjoy these things.
Miko, for people that want to get in touch with you to learn more about you, what would be the best point of contact?
My website, miko.com, miko.com. I've got all of my social networks on there, Twitter, LinkedIn, Facebook, and then you can also go all the way to the bottom and you can see my I have an email form that you can enter information into. I'm definitely always interested if any of my thoughts have stimulated any ideas in you, or, anyone who has any questions or comments. I'm always interested to learn and talk to people and, get feedback.
Miko, it was an honor having you on Geeks of the Valley today. Thank you so much for joining us.
Thank you.